The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 7th day of February. My pleasure to be here, and let's go straight to the market. Dow is up 287 at 25,200. Now, this is going to be very interesting. If you're looking here at my charts, on the left is the daily chart, in the middle is the weekly chart, and on the right is the 120-minute chart. One of the techniques we use here in the Chapman Wave methodology is that let me move this chart over. From the lowest, most identifiable low, we merely count each successively higher peak, labeling them alphabetically on the way up, uppercase letters, A, B, C, D, E, F, and G. You can't go higher than a G. But on the fourth highest peak, peak D, when it forms, it's a leg until it forms a peak. That's with a lower high bar that follows. D is where other things can happen. That's as simple as it is. From that moment on, other things need to be studied and taken into account. So what we had in the Dow is we went to that rare G at 28 in the S&P E-mini 2878.50. MACD was stochastic was fading, on balance volume turned down, MACD turned down, and it plunged from 2878 to 2529 yesterday. That is a whopper of a move, 240 points. And now what we're looking at is there's a really strong bounce. I've drawn in the H pattern. It's a pattern that I use in my Chapman Wave methodology. Lowercase h, it comes down. You can see right here it failed. And now what I'm anticipating is somewhere in the 27.15 to 27. You can maybe go to the 9-period moving average of 27.48. I suspect it'll be under that, maybe 27.32-ish, 27.28, a little bit higher. And at that point, I'm suspecting that there could be an arch formation. However, based on the volume yesterday, based on the candle that's forming in the weekly chart, which looks like I put a down arrow with a peak F potential, I don't see how we're going to make a new high of 2878.50 unless something absolutely remarkable happens. So as I see it right now, we have done over the decades, what I've done is I've looked at markets that make bottoms, and I established back in, gosh, I don't remember, 1984, 86, I don't remember what it was. I remember us making a low, and then there was like a 6-week period where a big arch formation occurred, and in some of the indices, some went to a lower low and some didn't. And at that point, I started talking about an internal low followed by a residual low. Sometimes a residual low is a climactic emotional response to negative news, but all the technical damage has been completed. It's already in repair mode, and the market immediately turns up and goes sailing to the upside. I believe we saw that in October of 2002 in the semiconductors, where they made an internal low, and then in February when I think the S&P made a lower low, the SMHs didn't, and they went on much higher. That's the semiconductor index. I'm calling this an internal low, and I suspect that at some point, because of the speed, look, this is just a 1, 2, 3, 4, 5, 6 days, not weeks, but days. Usually it's weeks. The crash of October 1978, 1987, I'm sorry, 1987, 78 was the blizzard that we just celebrated 40 years ago. Anyway, here in Boston. In 87, that was a 6-week correction. That was your typical, that the FTSE did it. The Nikkei, when it made its top in 1990, I think it was, had that same pattern and then had a really big bounce. So this is different. This is 6 days, not weeks. So I suspect that we're in the process of having a big consolidation, but I believe that a huge amount of damage was done over the last week and a little bit. and that there are many stocks that are, in fact, some of the stocks that we still have long positions in, like a bank stock, and in fact, in General Motors, is still doing very well, both of them. So, and the shorts that we had, still short, although we took big profits in them yesterday and last night, going into this morning. I'm suspecting that what we're really looking at is a situation where if there is a rotational correction going on, we're going to have to follow the steel stocks, the infrastructure stocks, see how they hold up. We're going to have to look at the bank stocks and look at the interest rates, etc. All right, let's just go on with the news here. And the news is that the E-mini, this is the real news, the E-mini is up 23.50. That's a huge move from the 25.29 low that was made just yesterday, and now we're at 27.18. What's really important about this, that peak D that I was just talking about, we're in a leg D right now in the 120-minute chart. Let me get rid of this. It's trying to make a left side test of the highs that were made at 27.63 at noon, exactly this time on the 5th. That was 2 days ago. I think this right here is an area where we've got to monitor closely. Now we're really basing everything on the news. Funding, all sorts of things. I think the Senate has to vote. Anyway, so now what we're looking at is, let's go, INDU. We'll run through this quickly because there's a lot to talk about. The Dow has had a little bit of a V-shaped pattern. It won't really make a V-shaped pattern officially for me until it goes over 25,500. It's at 25,236 right now. Outstanding move from the low, the low that's making a trough B, the low of 2370. 23,778. Let me just put that in here. 23,700 and I think that was 88. I'll just put 88 for now. And what we're looking at is this wick, this candle right here. We have already made a peak E in the weekly chart. Is this it? Has it held that dashed trend line that I've been talking about for a little while? That supported 24,000. It just went under it yesterday. Now it's way up. It's testing the weekly 9-period moving average. This is what I'm thinking, that there's a rotation going on, that if there isn't some bad political news, that is, whatever, the votes and all that sort of thing, news that is not necessarily financially related, then this market has a chance to make a very big arch formation and then come back and do a retest. 24,500 to 24,300 will really be key support over the next few weeks. On the upside, a break into the 25,670s. I would just have to admit that that's really good action, and that maybe sideways. I'm not sure about a new all-time high. There's just a lot of work that needs to be done in many of the stocks that are overbought. Let's go on. So we've got that. We've got the S&P, SPX.X. Here we go. S&P is up 23 at 2,718. A very nice, this was a single leg A to the downside. Now, I have respect for single leg A's and very quick single leg B's that really, B's that look like a single leg B, because it was just a fractional little trough at A. This is very important for those of you who are new to the Tiger Den, and I hope many of you join in. It's free for the month. Check out the front page of TFNN. I'll go through some of the technicals that I look at straight after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so let's look at the triple yield chart. This is the chart that I have that I show my subscribers to my opening call every weekend. And it's a weekly chart, and it shows that the 30-year T-bond yield, the TYX, has rallied very strongly in a weekly leg C. It should go to a D. It is in a D already in the TNX. That's the 10-year yield, the brown one. And the FVX, the 5-year T-note yield, is possibly making a peak C this week if there's no new high. And that would be above 26.21. It's trading at 25.35 right now. That's going to be very important. When I look at Wood and HGX, the Philadelphia Housing Index, that to me in a weekly time frame says that the home builders are probably having a big digestive phase, and they deserve it after spectacular. They've taken out 2 months worth of trading with this move down in 2 weeks. That's something to watch. Trading at 335 now at 475. High was 369, made a low of 317. I would say that a 50-point, almost a 60-point, no, about a 55-point correction in a $365 instrument, I would say that that's pretty big. And Wood, the iShares Timber and Forestry Global Timber ETF, has held this red dashed support line in the weekly chart. And we'll see, because at any point in the next week and a half, 2 weeks, if it closes under 71.30, let's call it 71. It's at 74.48 right now. That'll be very negative. Now, let's go. We've got the S&P. I give you the parameters. 9-period moving average is up at 27.54. That's a long way from here. It's 30 points, almost 40 points, actually. I'm suspecting that this arch formation is really dictating that the 27.36 27.28 to 27.36 is probably the level on the upside. But until it cracks 26.80, it's going to be holding pretty well. If it does create pull back to 26 under 26.80, just watch 26.70. If it trades for 3 days under that level, it's going to test the wick low that was made yesterday of 26. What was that low? 25.93. Oh, 25.93. So now let's go on. 93. I'm just typing that in. The QQQs. This is going to be very interesting. Why? Because the semiconductor index hasn't really done very much to the upside. It's the QQQs were affected a little bit by the SMHs at 162.44, up only 13 cents. Try to rally. It's having a tough time. My weekly chart says, at best, there could be a rally towards the 164.50s, maybe 165.30s. At worst, if there's a slide below 160 in the next week, that's going to be really tough for the QQQs. And the weekly chart has made a peak E already, peak E in the Chapman wave, daily chart at 178.95, only a leg C in the monthly chart, and that's a very big positive. Let's go on. We've got the IWM. Whoa, a lot of questions are piling up. Let me do this. IWM, nice bounce, up 66 cents, up 0.44. The Dow's actually up 1.07. S&P is up 0.73. This is only up 0.45. 150.36. This is definitely in the sell mode, in the daily sell mode. I'm actually going to say it's a sell mode in the weekly. This is the first confirmation I've had before Friday that this is in a sell mode. And then monthly, I'm watching the peak E potential. This is what I'm nervous about. Yes, the market is holding very well. What I am looking at is that we are looking at monthly charts, let alone weekly, but monthlies in D's, E's, and F's. That says to me, hey, respect the low that was made yesterday, because if that gets taken out in February, whew, we can go a lot lower. All right, so the upside, I'm saying that the records that were made just a week and a half ago, I'm not sure they're going to be taken out just yet. So here we go. We got the gold. Gold at this particular point down, 8.4. 1321. I've been talking about this 9-period moving average, saying there's peak D in the daily. That peak D that was made back in, oh, I should have put the date. Back the week of the 8th of September when that dollar made its first low. Now, that was the internal low. I think it's kind of making a bit of a residual low right now. And that was the top for gold. That was at 1372. We pulled back to the 1240s. Bounced to the 1370s, and now what we're looking at is a 1321 weekly chart under the 9-period moving average. This is tough stuff. It's just not very, it's not bad action, it's just not very good action at this particular point, and the technicals in the daily are very weak. I'm going to go to the dollar. Dollar's trading up a little bit. It's up 51 cents at 90.20. Well, I said a little bit when I last looked at it, but for my subscribers, we're actually long. The dollar. I think this is the change of trends that are happening right now, at least in the shorter term. So yep, we're in leg B at 90.20. I said until the dollar gets to the 90.75, 91.20 area, this is just a little bit of a bounce. If it breaks above that and closes, that's great. I'm going to go to Ben in Tallahassee. Ben, how are you?
Great, Basil. How are you?
Very good, thank you. You'd like to look at?
Yeah, so a couple questions, and the first one, a little bit higher priority, so if you got time for the second one, great. Are the Qs in a monthly peak C still?
Yes. I have to be very strict. Normally, under these conditions with all the others in D's and E's, I would say let me look for 2 parallel highs that I can count as a phantom peak C. So if you look at the highs that were made, there were 3 of them. 145.96, July of 2017, so 596. Then we go to 146.21, just 50 cents higher for August of 2017. And then 46.21, it goes to 46.59. So technically, I'm going to wait on this. I would say, I like to be ahead of the game. I don't like to be behind. So I would normally, I'm just going to do it for demonstration. And I'm going to go back to what I would like to keep it at. I'd make that a phantom C and say, all of the on-balance volume did pull back, and that gives me a legitimate reason to say, fractional new highs in a major monthly chart says, hey, maybe we are in D, but the technicals are still so strong. I'm just going to give it the benefit of the doubt. I don't have to make those decisions right now because we have to still get a real big sell signal to a sell mode this week on Friday if the Qs close poorly. that'll say that weekly chart really is in a sell mode. So the answer is absolutely correct. You're 100% correct. But the 1 or 2 times ever that I changed the notation in a monthly chart, I did that years ago in crude oil. I missed it because it was a C, and when I finally went back months and months later, I remember being on air saying, I've got a sell signal in the daily. I've got a sell mode signal even in the weekly. It's just this monthly, so we never went short, which was a great shame. It was a perfect shorting opportunity. When I went back, eventually, I wonder if I've got it here. And I'll show you, because I need to just explain that you don't have a methodology if you're if you're fitting it to a technique.
And then is the NASDAQ the same as the Qs, or is that in a G?
I'll be back. Can you hold on, and we'll be back, and we'll talk about it. I'll be back, folks. Basil Chapman, Tiger Technicians Hour, and I'm showing that phantom peak in the crude oil monthly chart back in July of 2000.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back with Ben. I'm just showing you the monthly chart of crude oil. There was that phantom peak that I thought I should use, and I didn't use it. It went to a peak C, but actually that really was a D on July of 2008, and what a turn down. I've got, this is a continuous contract, so it was somewhere in the 216 area for crude oil, and then it comes down to 89.11. Anyway, that's the chart that we're looking at. So I need to just keep it in mind. It's very important that I keep these things in mind, because if I lose context, then I'm in trouble. So now let's go back to.
Is that the only? Let's call it index
Aberration.
of importance that's in a peak C right now, and all the others
In the Qs, let me just see if I've still got this notated. Give me 1 second here. NDX, I think, no, I don't know why I've lost it. The NDX, I believe, is exactly the same because it had in July of last year, it was 599577. Hey, 599. 45. You know what? I'm going to I'm in D in the NDX 100. I didn't see that. Yes. Oh, thank you for bringing this up. It's a 20-cent, 30-cent difference, and it's 32 cents, and that makes a difference. We're in D. Okay, now we got all of these in at least a D. Thank you for,
Okay.
I thought I recalled that, and then I completely forgot about it. You just reminded me. Thank you very much. So I'll be back. I'll do it tomorrow. I'll do that in a little bit more detail, so I've got it. I don't want to be incorrect about it. So now your question is, just quickly, the QQQs, let me just say, at this particular point, if the Qs break about 157-ish, 159-ish support on the short term, and then hold for an entire 2 to 3 days below that level, then I'm going to look at this really closely. And one of the reasons is that you've got some of the real biggies, like Amazon, which these are all part of the Qs, that are making tops. But Amazon had that round number high, and today it's kind of fading. It's up only 5. And that 1498 round number high is at a peak D. And I'm going to be watching this real closely, because if these real big major stocks, the core of the modern American society, if they start to turn down, I don't think the Qs are going to be holding up. So that was your first question. So that's what I'm going to say. I'm watching this very closely. Even the action today, just up 0.07, not very good action considering that the Dow is up 1.1%. Your next question was?
Yeah, so this, just pure personal opinion, and I know I've asked this a few times. This computer-based trading.
Yes.
And I'm making an assumption that these H patterns that you identify, I think you're spot on, and I think it's based on human psyche and emotions and whatever it is that creates these H patterns.
Right.
Would you agree? Because I feel strongly that the sell-off was exacerbated by hitting certain points in these algorithms that may have exacerbated the trading. So having said that, if you agree, if we have a strong H pattern and these patterns kind of hold up like they did, 30 years ago before, these computer-based trading systems, is it fair to say that these formations, whether it's computer or you have someone behind a computer trading, that somehow the consistency is remaining the same, whether it's a PC making the exchange transaction or a person?
So let me just get to this. I remember trading 30 years ago. I remember very well that it wasn't computer-generated anything. It was, I thought of the word just a moment ago, program selling, program buying and program selling. And that was basically when certain, give me a second. I'm going to extrapolate a whole bunch of stuff so that I can articulate my thoughts clearly. One is, I've always said when I used to trade options that most option players didn't particularly know exactly which way things were going to go, but as soon as it tilted to a particular level, it's not as if they all, I don't even know who they is, if they all, gave a thumbs up and everybody piled in and went long or short, whatever the direction was. But what happens is, I've been a conductor, a music conductor in my day, and it's the same thing. The orchestra does everything, but you are just giving that little extra speed or a little slowdown, a little nudge. It's like in the Boston Symphony Orchestra. Do they need a conductor? No, they're good enough to play anything without a conductor. But a conductor just gives them that, is the coach, is the Belichick, is the one that really just gives that little edge. So that's now what I'm saying is that if you go to program trading, if you go to electronic trading, you go to anything. I have a book I've spoken about very often by, it's called The Wave. And I was actually going to interview the author, and I didn't. But it's an incredible book. I can't see the title right now. It's up on my shelf. All right, I can't see it. And what she spoke about is that she was just a journalist and then got interested in surfing. And she then, at the exact time that these guys out in California were surfing 80-foot and then 100-foot and then 120-foot waves, she became very good friends with them and went on some of the waves, not the very big ones. And she wrote about it, and she went to all the scientific meetings around the world on on volcanoes, on earthquakes, and on tsunamis. That's really the whole thing was on tsunamis. So a tsunami occurs very often from a kind of an earthquake below ground in the water. So the conclusion was, after going to all these meetings, that things haven't changed other than the amplitude is going to get greater. And she said this, and the book came out like 3 weeks before the Japanese earthquake. It was just incredible. And what she had said, the conclusion was that nothing really changes, but the speed and the velocity and the actual dynamic is greater than it's ever been, and it should get worse and worse. That's all we're looking at. So in proportion, just like the Dow had a 1,000-point move, percentage-wise, it's nothing. Wow, 506 points was the big crash day of October the 19th of 1987. So what I'm saying to you is, I don't really think there's that much changing. Just the speed and the velocity is going to be really gradient. The gradient will be greater. The momentum and the torque will be greater. But that otherwise, it's. I remember it. I mean, people complaining about program buying and selling. It just always happens. So yeah. So the answer I should have said to you right away is no. I don't really see a very big difference. I do see a dynamic difference in the size. That's all.
Yeah, part of that size might be also with all these ETFs now that are forced to sell because, they got all the different companies within the ETF.
That's a different thing altogether. Okay, that is mechanics. Okay. That's a little different, yes. So I don't know if I've helped you. Thank you very much. Always a good call, Ben. Thank you very much. So, folks, let's just continue with this one. I want you to look at is, look, high-grade copper. Look at this move down. This is serious stuff. So if wood, the iShares Timber and Forestry ETF really starts to tank, copper starts to, it's actually breaking down right now. It's at 3.09. Yesterday I said if it takes out 3.12, I think I said, well, here it is at 3.09. These are signs that are saying to me, regardless of what's going on, if you want to trade, I said to subscribers, yeah, nice trades are being set up, but I'm not sure that these are more than trades. There will be some stocks that maybe made lows yesterday that might not be taken out, but I would be careful right now. Even though the Dow's up 200, S&P's up 13, this is a time that there are a lot of things that are going on. I'll be right back, folks. The Dow is up 199, S&P's up 13. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're looking at here the 5-minute E-mini. It made a peak D in the Chapman wave. It's got that H pattern. Look, it took out the left side low. Bam! It's coming down. This is very important. So we're going to be watching it. And remember, this is a news-related market. There's a lot going on. So within the context of what we're looking at a peak E in the platinum trade right now, down 7 at 987, made a peak E with the Chapman wave sign and doji following. MACD's very poor, stochastics right down at 18%, single leg A to the upside, holding very nicely considering, but I just have to tell you that if platinum takes out the 50-period exponential moving average right there, 974 support in the next week. Wow, the 200-period moving average of 961 will be beckoning. This kind of pattern here, remember, the one that I talk about is that narrow channel to the downside. This is a little different. It isn't really a narrow channel. It has more the look of an arch formation. So what would be very positive for platinum is if it's able to get to 1,007, but it really has to do that 30 points, 20 points higher, and it needs to do it really soon. By Friday, I would even say. Okay, a couple of things that we've got. Now let's run through the questions. Yeah, I forgot to tell my subscribers for 2 days. I can't believe it. I've just been, there's a lot going on that I've had to do, try to fit a lot of time in for some other things that were very important. So I completely forgot to tell my subscribers that my Chapman wave trend gauge on Wednesday, on Monday and Tuesday gave extremely high readings that said there should be a 9 to 11 point rally in the E-mini at some point after a pullback. Boy, was there ever. So that happened, and now we kind of used up that one. So that was the trend. The trend right now is not giving me any indication. It did for today, and I forgot to mention to my subscribers. Next question is the IWM. What about the IWM? Lagging the S&P in sell mode. Okay, this is what I went through. This is a single leg. This is a gray leg A to the upside. It's only a leg B, a trough B to the downside. I suspect that the IWM, if it starts, I think I discussed this, if it trades below 148, halfway into the wick, if it goes under 148, it's at 150 right now. If it goes under 148 and trades there for more than 4 hours any particular day, there's just a real good sign that it's going to test the 148.29 low of yesterday. Upside looks limited. Next question. Oh, UTX. So this is going to be very interesting. Look, UTX made an all-time high just the other day. No matter how I count this, I've got this as a B. I should say it's an alternate count. No, it can't be an alternate count because we started the count at 111.33. So this is fresh. This is a brand new A to B. It could fail. It would be very unusual for a weekly to fail at a B at an all-time high. But in the meantime, I think this is just telling us that United Technologies trading up 270 at 132.51, having made a peak F high, all-time high on the 29th at 139.24. It's only 7 points below that. But that was a big move from 139 down to 123. I would say that's a big move. So it's 10%-ish. So what I'm looking at here is there's a good chance that UTX is outlying what could be a retest. And I wouldn't be surprised if the retest is, at least some retest, is higher than the low that was made. And instead of going to the 123s, it actually 127 to 126 is the level that someone remind me if it gets there, because that's the level that I think we've got to start looking to see, is this possibly a buy in the UTX chart? Okay. Boeing had a couple of reports, emails that came in to say there's some funding perhaps for the defense area. Boeing's acting, look at this, up 10 at 351, made a peak E at 361.35, 1st of February, kind of pulls back to the 319s. I would say 50 points, 48 points is a big 11, 12% move. Now look at this, in 2 days it's getting back. So I'm watching Boeing because there's only a G/C in the weekly chart. The technicals are still very strong. This is a monster. So I'm using it a little bit more as a bellwether than anything else. Maybe with Amazon, go to different areas. So I'm not saying anything yet about it other than to say, wow. Next question I had is XOM. Let me just do this rather than the other ones that were mentioned. So XOM is down 35 cents to 78. This is ExxonMobil. This is not good at all. And this is one of my big fears, and I've been asked over and over again, what about the integrated oils for dividends? And I've been saying, if you can get them down towards their lows with a tight stop, much tighter stop than the dividend, 4.5, whatever the dividend is, that's the way to do it. But I would not be buying it near the highs. And now it's from the 89s, it's down to the 77s. So let's look at it in 2 days' time. Whoever asked me, who was that? Let's see. Yeah, Judy, will you ask me again? Because I can't do anything right now with it. All I can say is this is in a down mode in the daily. It's in a down mode in the weekly. And the monthly chart, look at this monthly chart. This is not a good looking chart right now. So I am very worried about Exxon. And CVX is the same one. This is Chevron. It's a little bit better. It's a little bit better chart because it's rallied and didn't take out the lows. This hit the 107 level. CVX trading at 116.58, down 60 cents, hit at a 107.93. That's exactly the 200 orange color 200 period exponential moving average. So hey, this is a little bit better. Maybe out of the two, if you had to choose, Chevron's the one that maybe is holding a lot better. This is tough stuff. Now let's just look at this. We've got next question was short haul. Oh, the next question was, where do I think, just outlay for me what you're thinking. It doesn't mean that it's going to happen, but what is your thinking for the market? So let me just do this right now. I think this is a correction. That's a much needed correction. I don't think we're coming out of the correction in 3 days with a brand new all-time high. I just don't see it. I think that there's enough conflagration going on between the two parties for the president not to be getting his way as he wants it, and that's going to cause some market disruption. The president claimed that the market was his when the exact day of the high of 26,616. Hubris. It's just never, no matter who you are, don't ever pat yourself on the back thinking the market knows who the hell you are. The market couldn't care. The market is the market. It's made up of hundreds of millions of trades going on all the time. The market is a super tanker. And for a super tanker to make a turn, you can get super tankers to turn, and they are very wide turns. It's not a little speedboat. It's not me and my little motorbike as a teenager racing around, making these quick turns. This is the Harley Davidson. Okay, this is the biggie, and it takes time to actually get the turn in motion. And by the time the turn is already made, I remember I grew up on the coast as a preteen back Cape Town, South Africa. I remember looking out my window, happened to be able to see. At that time, it was just an island. Nothing was there. That's Robben Island, where Mandela was imprisoned, but it wasn't anything like that when I was a kid. Just once a year, there was in the spring, there were swimmers who used to race there and back. And that's all that ever happened. But I remember watching the waves, and I remember looking at boats, and you would look at a boat and you'd forget about it, and then like 10 minutes later you look, and it's way out in the distance, and you say, gee, I didn't even see it turn. These are slow-moving things. What's happening right now is the speed of a turn, the start of a turn. I'll be back. Dow's up 200.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. Steve Rhodes, 3,000, 6,000 miles away, at least from me right now, out there in Hawaii. He'll be coming up next. Don't forget, great show. Then, of course, wonderful Dave White and fabulous Tom O'Brien. Wednesday today, great programming. And, of course, I'll be back tomorrow. Check out my opening call. I think you'll find it both interesting and hopefully very lucrative. But what we're looking at here, the last question I had was New York Stock Exchange Chapman Wave. So this is it. It makes a high 13,635 on the 26th of January with the other indices, Rare Peak G. And then the technicals just completely fell. Gaps down, the 9-period moving average just becomes a repellent zone instead of a propellant zone. And bam, it goes down from the 13,600 area to the 12,300 area. That's a big move. Now what we got is a nice bounce, about a 1/3 bounce, maybe a little more, and it's trading at 12,788. Very strong resistance I would put at 12,920s. 850s to 12,920s, but it has to hold 12,570s. If it takes that out in the next week and a half, whoops, it can go quite a lot deeper. So let's just go over things the way I'm looking at it. Very important bounce. And the VIX, I never even spoke about it. I could have spent a whole hour on the VIX. I'm just going to make it really very simple. At 50.30, it goes into the rankings of the China, United States rates volatility of 53.29 back in, was it August or whatever it was back in 2015. This happens very rarely. I don't know what's going to get it back into the 50s, but it hit 50 yesterday. So this is going. All I can say is that the volatility index, you got to keep your eye on that, because it could, the next rally, unless it's horrible information, I would put it at 38. It's at 24 right now. 38 would probably be very strong resistance. Wow, if it goes above 38, there's a real problem, and that VIX will probably take out the 50.30 level. Watch the volatility index. Keep it on your radar. At this point, it's saying short term, all's well. We've got a lot of support in the market because it's pulled back 5.5 points, 18% on the day. So keep an eye on that at 24.29. If this goes under 20, the market's going to have a decent rally. So thanks for being here. Stay tuned for Steve. I'll be back tomorrow. Check out my opening call. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.